Okay, I'm recording this portion of the call here, but it's very, very simple, very straightforward. We can probably knock this out in under 120 seconds. Very, very simple. So just did this for Heather. She's a 30-year-old in the Phoenix area, Arizona. So couple things. It pays off the mortgage 5 years earlier, guarantees or gives a guaranteed lifetime income tax free at the end of 30 years, um, gives her access to cash, and protects her in case she gets sick. So she has a $200,000 mortgage, 30 years, and this is just bankrate.com, by the way. You can go and play with their amortization schedule if you like, but it's for 3.25. And you can see that we have our estimated payoff date here of December 2045. It's 2020 now, so that's 25 years. How are we making this happen? Well, really simple. Heather told me that she had about $100 a paycheck that she didn't really care too much about. She might throw it towards the mortgage, she might put it in a savings account, whatever it is. So we just scraped up that $100 per paycheck, which is she's paid biweekly, so $200 a month into this. So this plan, again, super simple. Creates lifetime tax-free income, 5-year early payoff, accessible cash, living benefits for her, and goodbye benefits. So I'll explain that very quickly. So first things first, is it paying off the mortgage 5 years earlier? Yes. All right. So here we go. She's 30 years old. This is year one. Now, starting off in year one, this money, a portion of it's invested and it's indexed, and this is an illustration. Obviously, nothing is, to the penny or anything like that, including the bank rate that you just saw. So this is all, that's why it says estimate. They're all estimates. But if we're looking now into when she turns 55, that's year 26. So right after the 25th year, we can look and see that she has now grown this invested account to approximately $110,000. So boom, we're taking out 48 grand of that, and that's why you see this drop here. We're taking out $48,000 of that, and we are paying off the mortgage. That's why this says one-time mortgage payment in December of 2045. So it's paid off. House is gone. 25 years, we're good to go. Save some interest, save 5 years. Part one is done. Okay, now this is where the good stuff begins. If we look down, where's the guaranteed lifetime income? All right. Traditionally, if she just would have went about things and done nothing, this is year 30 here. So this is when the house would have been paid off, and the very next year is the year 31. She's 60, going on 61. Now this plan begins to pay her a guaranteed lifetime income of $11,215 a year, and that's a little under $1,000 a month, right? Tax free, mind you. So this is not taxed. So a little under $1,000 a month for her entire life. So I mean, down here she's 77. You can still see my markings from me explaining it to her, but yeah, I mean, it goes all the way down to even 105. We're still doing the same. This column right here, $11,215 tax free every single month. Now, we did the early payoff, we did the lifetime tax-free income, and now accessible cash. We've created an emergency fund. So let's just say that year 45, which is 16 years in, that her refrigerator goes out. She needs a new refrigerator. Well, if we come over here, how much money is in this column? 46 grand, right? So now she has $46,000 that she can take from to get a new fridge or a new radiator for a car or whatever the case is. All right. So this whole entire column is accessible cash for her. So we've created an emergency fund for her that she wouldn't have had if she would have just thrown that $200, directly into the mortgage, for instance, or any other way. Now, living benefits. What do we mean by that? Well, this plan comes with terminal, chronic, and critical illnesses. So if she is ever diagnosed with cancer, heart attack, or stroke, and like in my family, we have really everybody has cancer almost. So even on the CDC website, if you go on there, 33% of females approximately will get cancer, and it's almost 50% of men now will get cancer at some point. So a whole lot of people. And if that does happen, let's again use 45 for instance. So let's say you're 16, she gets breast cancer. Come over here, she gets 40% of whatever this number is. So she's going to get paid out a little over $100,000 of tax-free money that she's ever diagnosed with any kind of cancer, heart attack, or stroke. Okay. So it protects her from financial ruin. If you've ever known anybody that's dealt with those critical illnesses, it's devastating. And banks don't wait for their money. So, what is this column, this far right column? Well, those are your goodbye benefits. So that's your life insurance death benefit that's attached to this plan. So you can see here the death benefit on the very top. So starting year one, she has $207,000 of death benefits. So remember, the mortgage is only $200,000. So if she passes away, even in the first year, boom, that money is paid out to her child. She has two children, to her children, and the mortgage will be paid for, for the family. Um, let's say that she passes away when she's 45, going on 46. Well, you can see the death benefits, 243,000. Boom, the house is paid off. That's more than enough at that point, right? So every single aspect is covered. Lifetime, guaranteed tax-free lifetime income when she turns 60. 5-year early payoff for the mortgage. She created a really good emergency fund here now for anything that she might need. Uh, Living benefits in case she ever gets sick. And if she decides to leave us and move on to the next life, then the house is paid for. All of that with a measly $100 per paycheck that she wasn't really sure what to do with. So all of this is combined. There's a bunch of different companies that can do this based on the state that you're in and your age and your gender. That's going to determine which ones are going to be the best for you. So that's what we do. We just take a look at the certain person, obviously, whatever they have as far as capital that they're thinking about throwing into this thing. So feel free to reach out. We can run this report, go over it with you, and see what we can do.